Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the pullback on the crypto market as well as the stock market as we have a reaction to the dollar just spiking up and Federal Reserve board members coming out saying, no, there's not going to be a Fed pivot. In fact, we're going to continue aggressively raising rates, and the market just did not like to hear that. Of course, this Fed pivot has been mythological. People have been asking for it for so long, just telling each other it's going to happen, and so everyone keeps FOMOing in to every pump, which just end up being fool's rally. Are we going to enter another fool's rally, or is this one going to fizzle out and we just have hyper capitulation as this market grows exhausted? Well, it is a politics season. It is, of course, October, so called, right? And so there is a good chance that we could get a bounce after the flop during September. And, this thing, these markets tend to have a little bit of lift to them during these times of year, during these type of political seasons. And so, although the dollar is aggressively rising today because of those words by the key board members of the Federal Reserve and some other factors that we don't really have to go into, it's all just a macro slurry of madness these days. And, it's really hard to parse through it all. If you're confused, don't feel bad. Everyone's confused, including some of the best and brightest economists and macro analysts that exist out there. It's just not that easy to parse through all of this macro madness. And so, that's why a lot of people get suckered into FOMOing into just deadly traps on the chart. And one of those potential traps is what Bitcoin is facing right now, where we have had this macro downtrend that has just resulted in us being rejected, 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 right? We've just been rejected over and over again from crossing this red line until, finally we were accepted and we broke through in this last week. We have just broken through this macro downtrend supply line. Well, of course, that doesn't mean that we're out of a downtrend. We could be just forming some type of a technical lower high just a little bit further out from our trend line, right? And so you could just easily just draw a new downtrend line, right? And so we're not technically out of a downtrend, but we have broken that downtrend line. And in the past, if you look at Bitcoin and basically any chart, when you break one of these type of macro downtrends, often you get a nice bounce, right? And so even this capitulation moment down here broke that one, a nice bounce. Let me just expand this up, and you can see that it doesn't matter. Overall your price is going down, right? Down, 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 right? So this thing was a horrible market to be in, right? Just a horrible, horrible market to be in. But you did break the trend line, and so pow, right? You broke the trend line, and so pow, right? You got a little pump there, a little pumpy for you. And guys, I think that we could be facing one of these potential, pumpy moments. And while it could take a couple days, it could take a week or two to, sort itself out. We are looking like we could be in one of those areas, one of these type of setups for that potential just a pump, which I would suggest probably could take us to 24K. Okay, if I just wanted to like eyeball an area, it's very hard to figure out how this could actually work because we have to think about like so many macro factors. In the past, right, when they had those breakouts, the Federal Reserve was still printing money. And so, yes, you could get a 40% pump on Bitcoin because the Federal Reserve was printing money, guys. It was like unlimited free cash back then. So, what's going to happen during an era when there is not free liquidity in the market and when the market is actually tightening, right? Well, maybe we don't get such an amazing bounce. Maybe we just get kind of a fizzle and kind of more sideways crabbing to the side, right? Like a crab like walks on a beach, right, to the side or whatever, and just sideways action. These low liquidity environments do tend to allow for pops, and there is a lot of excitement when a floor is established, and so you could see some type of a dead cat bounce, some type of relief rally, some type of fool's rally, a sucker's rally, whatever you want to call it, before ultimately we just come back, maybe even to our baseline of 20,000, and then perhaps fall off of a cliff down to 17,000, 16,000, 14,000, 12,000, 10,000, maybe even 8,000 or 5,000. And yes, there is a hypothetical case for $3,000. I won't make it, but many bright thinkers have made that case. And so, just for a disclaimer, all of that is still possible, but we're not there yet. We're dealing with this level, and this level is saying, hey, maybe we're going to have a breakout relief rally, but guys, we have dun 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 the second boss, right? The second boss I introduced you to a couple episodes ago. If you haven't seen that episode, go find that episode. It's just a few days ago. I said the second boss. It's in the title. You're gonna have to fight the second boss, and you can go ahead and click on the video. There's a chapter in it about the second boss, and you can just click on the chapter, so you don't have to watch the whole episode. You can just check out the 5-minute section regarding the second boss and all of its details. But in a nutshell, this half year long macro downtrend resistance, kind of macro, but it's more of like an intermediary resistance. But it has been acting as our macro resistance, and I'll show you how. Just rejected, right? Rejected, and then are we rejecting again? Are we going to get sent to a punishing hell from this blue, major downtrend line that's just been killing us for the last 6 months? And no, guys, it was not. It was not our macro downtrend which killed us here. It was our intermediate, this kind of secondary macro downtrend right here that just slapped us down, slapped us down, slapped us down, slap, slap, right? And so, guys, like this one is no joke. We did not even reach these macro downtrends. We got smacked down at this one. And so it's kind of like the market is just extending, right? It's just extending this supply line, and it just decided to like readjust it. So it's almost like this line is actually this line, or rather this line is actually this line. It's just like this one just like became this line over here. Okay, like it just changed its trajectory. That's all. And so I think we should regard this blue line here the same as we regard this red line. And so I want you guys to be just very cautious that we are up against potentially our macro resistance. And by the way, I can say that because now that this one, right, now that this blue line exists outside of this red line, this one now is our macro resistance because, like what can I do? Like, of course, we can just extend now a line all the way from there to the top of this one, right? And so guess what, right? It's like the meme, right? I am the captain now, right? Like this blue trend line down is the captain now, and I don't know what color to make it, but let's just make it a red line. There we go. You can see it pretty well, and and look, right? So this is the macro downtrend now, and it is whatever's underneath this blue line. And so no matter where price action pumps underneath that blue line, like I can always extend this line to go meet it. And so it is our macro downtrend until we put in a higher high, until we have a macro pattern of higher highs and higher lows, right? Then, of course, we're still in a technical downtrend on the macro. And officially, this second boss is our new big boss, guys. This is the deadly force that we need to beat, and we just haven't beaten it yet. We got slapped down twice. We're making a little bit of a double top. We're getting pulled back, and we're swimming around in my momentum zone right now. But that's not really what we want to be doing. We want to be breaking out on top of this and just going for it, just going for it, getting away from this type of, diagonal that has ever slapped us down and just dealing with our levels, right? But right now, as we have this rejected zone, it's just not good for us to be in here. We have to break out of this, and I'm not going to be uber bullish. I'm not going to be, one of these FOMO guys, right? Like one of these degenerate apes who just like goes all in, right? Unless, and I'll never go all in on any one trade, but unless we get above this macro downtrend, and I can call it our macro downtrend because I do believe it's a distortion of this red line and an extension of it. Just the market is modified, that's all. And guys, so let's just move past that for a second, and let's look at the key levels to watch for Bitcoin, right? So of course we have my momentum boxes here, and you're all probably here for just the key levels. And if we do take a look at it, well, just I update these levels every day. This is just your MACD continuation and your daily Stokes. If you're above those things, it's in your favor. If you're above both of them, you're pretty solid. Okay, like you're not really, there's not too much to worry about. And so, just on a face value, as long as you're over 19,600, then just by my momentum levels, we're just doing a check back, right? After having, been in this accumulation wedge to the upside, and then pop, right? We just got a nice pop out of that accumulation wedge, right? Everyone accumulated, they bought all that they wanted to buy. The sellers got exhausted and just pop, right? Well, now, of course, we have to check back to see, if these guys really made the decision that they meant to make. And so we're just doing a little check back here, fully within our momentum zone. Right? No big worry. We haven't really captured any macro bullishness. We're not above our 9 weekly EMA, but we're not in any type of a dangerous situation. And technically, we can consider we have some type of support in this area. So guys, 19,600 is kind of the area you don't want to lose if you want to have any chance for for really hopium fueled bullishness. But let's go to my momentum boxes because this is the secret sauce, guys. This is the formula that I'm making for you guys so that when we look to see how price action is working in these kind of like swimming pools, just imagine it's a swimming pool. This is the top of the swimming pool. This is the bottom of the swimming pool. And yes, you can swim around it during any one day. You can swim around it, but how you close is really important. If you close on top of it, you're getting a breath of fresh air and you're likely to see a pop to the upside, right? That's what happened over here when we had our previous momentum box. We got a nice pop off of that, right? Like somewhere over here or over here. And then, guys, like when we are underneath it, right, then we are basically drowning. We're gonna probably continue to drown. We're gonna die basically, right? And so you don't want to go too far in the deep end. You can't swim back up. You lost your breath, and now you're passing out at the bottom of the pool. Likely you're going to just continue to fall. And guys, so right now, we really did try. We really did try to hang on to the top of the pool, just kind of lounge by the pool, just kind of getting some sun, but we ended up going for a dip. And so now price action is just swimming around, right? It's just swimming around, just having a good time, just kind of chilling out, nothing to worry about. we're just chilling, guys, okay? Like, don't freak out just because we have a pullback. Like, we're just chilling. We're just chilling, guys. And so the key level to watch for bullishness is if, we get on top of these areas. We weren't able to do that, unfortunately. So there's an open question, okay? Because this teal box right here, this is yesterday's box. It closed this afternoon. It's no longer useful. We neither were on top of it nor were we below it. We're just swimming in the pool. So let's see what does the pool look like today using today's secret sauce, right? Well, the pool today, and let me just get rid of this macro downtrend and the trend too, so we kind of have a clear picture. Well, it looks like we are sitting on top of the box, right? So look, we got some fresh air, right? According to the new box, we got some fresh air, and so like we're pretty chill, guys. Like we're on top of the momentum box, and so we're pretty chill right now. Nothing too much to worry about. And so this is our new pool. We're just lounging by the pool. As long as we're holding here or higher, then there's nothing to worry about in my opinion. Okay. Now we also had lost the 2 to 5 day top of the box for our previous session yesterday, and then unfortunately, if we extend the new session, it's exactly the same. So what I said is, of course, this white box, and this is our new one, right? I just deleted the old one, but our new one, sometimes the white box is above the blue box, and sometimes it's below. It's just a projection for the next 2 to 5 days. And so, where are we in the context of the white box for the 2 to 5 days? Well, we're just swimming around. So there's nothing really decisive about the next 2 to 5 days being suggested by this price action. But at least for the day, like we're pretty good, right? We're pretty good for the day. Not really 100% clear for the next 2 to 5 days. Really, we would want to be above 20,100 and let's just say 60. So 20,160 if you guys want to be uber bullish. Just holding on to the top of the pool right here on the daily. Let's just call it 20,000 flat, 19,900 and I don't know, whatever. What is this? 60, right? 19,960. We just hold on above there. Like we're good for another day, like Alpha Fam, like just chill out, right? And then of course if we go swimming around in this area, not a big problem. And then we probably want to hold above our MACD continuation at that 19,600. I am gonna get worried if we lose the bottom of that. And if we do lose, well, according to the 2 to 5 day projection, if we lose 19,050, then it's probably game over, guys. Like we're probably checking the lower levels, okay? And so those are your levels. Uber bullish above 20,165. Kind of bullish above 19,960. You don't want to lose 19,600, and you're basically drowning. You're basically drowned if you're at 19,050 or below. Okay, those are your levels to watch for Bitcoin. Guys, looking over at Bitcoin CME, the professional exchange, well above our momentum zone. So same principle applies for CME. Not seeing any new gaps forming or anything like that. Let's check out our EMAs on a CME. Just to see how the squeeze is going. And yeah, we're facing resistance on the 4 hour for that 200. It could take a little force to break through. On the daily, we still have the potential for the squeeze to the upside. We are getting a little bit of a bullish structure here on the CME, and so I do like to see that. We're holding on top of the daily 21, so no worries there. As long as we keep at these prices, then even the professional exchange looks pretty okay. This thing, these EMAs are rounding a bit. I do not like that look. When they start to round, it's easy to flop over. But I do think that probably we get another push, at least to 21,000. Sort of this kind of golden pocket I have marked out here. Before we could really be considering if we're just going to flop over and die. But I don't know. Let's see. Okay, guys. Let's move over to Ethereum, and of course, same principles apply over here. Let's see. Let's go to the 4 hour. And let's see, the gray is my new one, so I'll just move that one back here. So for yesterday, the number that we had to beat, right, was actually 1350, right? And look, guys, Ethereum held on to the top of my momentum box. So it's totally doing what it needed to do. It's just breathing fresh air, guys. Like it's not even, it didn't even go into the pool to swim around. Like Ethereum just bullishly, like, sat by the side of the pool, just chilling out, getting sun, right? Just being cool there, and didn't even get wet or didn't even bother with the pool itself. And so, of course, it was in no danger of drowning. So Ethereum doing what it needed to do yesterday, I can delete this daily momentum box. A good sign by Ethereum. If we go ahead and extend the 2-day to 5-day projection that I had, also sitting on top of it. So again, like it just looks bullish for Ethereum. Like that looks bullish, guys. Like what can I say? And let's look at our new updated momentum box here, right? This one is for today. It expires at the end of tomorrow. And guys, look, I mean, again, like above that momentum box, very similar to the previous one, Ethereum just doing what it needs to do to basically hang on to those bullish levels. I am going to recolor these ones because, of course, we are updating the momentum zones, and so these are good for another 24 hours. And so the key levels to watch, pretty much once again, 1350. We just hold above 1350. Pretty uber bullish, guys. Okay. Look, we get below. Let's look at these. Yeah, we get below 1320, let's call it. I'm going to get a little bit concerned that maybe it's not going to be sustainable. Probably we're going to be falling out of a rising wedge, and so I just would not like that look at all. But if we do bounce down to the bottom of the pool, bounce back up, that could be, where this momentum is preserved. But that would probably be a bearish retest of this kind of rising wedge. So just to be cautious if we do lose 1350. I don't like the look of this formation, to tell you the truth. But as long as we hold within the formation, we can get on top of it and perhaps keep going and even continue to redraw. This might end up being a channel, right? It might end up being a channel rather than well, it's still going to look kind of like a rising wedge. Guess just going to watch out for that, okay? But anyway, if we do keep going, then maybe there's a target of a 1400-ish, right? Somewhere in this area. Probably could bring this down a bit thanks to this wedge. Guys, let's go ahead and look at the bottom. Like, where are we just going to lose everything? That's 1275. We've talked about this before. And then mostly, I'm going to be really worried at 1320, though, just because of the structure. And we don't want to lose 1300. If we're at 1275, I mean, we're probably just going down anyway. So. Guys, those are your key levels to watch for Ethereum. And then Ethereum, CME, the professional exchanges, pretty much the same thing. I don't think I updated the momentum boxes for this one because I think it's probably better just to deal with those boxes on the 24/7 exchanges rather than just kind of repeating myself on the professional exchanges. But for the professional exchange, you can see that we are well above our momentum zone right over here, and so like we're not in danger of losing anything. Again, around that 1300 level, we don't want to lose that. And of course, because of this weird formation, I'd rather see us pump here, okay, guys? And this does look like it has the possibility to pump. Let's go ahead and just look at, yeah, volatility is on the floor on the 4-hour. Is that there is some possibility for a little bit of a pump here. So yeah, let's try to maintain that area as I mentioned on the key levels for Ethereum for the 24/7 exchanges. This was, of course, the professional exchange, but very similar principle. Um, just looking at the EMA structure on the daily for Ethereum. Yeah, I mean, look, yeah, so it's exactly what I was saying. Like, we have to hold this level, and we're going to maintain this squeeze. But if we lose this level of 1350, we're going to lose this squeeze. You see the red line and the yellow line? That's the 10 and the 20 EMA. I use the 9 and the 21 EMA. But we're going to have the possibility for a squeeze if we can hold between those lines. What I don't like is that this 20 simple moving average is coming down. So I don't want to see us get slapped down. It is a risk. You can see us breaking structure just slightly here. So it is a risk. We need to be between this red and yellow line, guys. So above 1350, that's really where I want to see Ethereum. Stocks are looking, um, I don't know. Let me jump down to the 4 hour. Yeah, I mean, they're just not looking that great to me, to be honest. Let's go ahead and just move that momentum zone back. So these are the momentum zones we had to hang on to yesterday, and sort of like Bitcoin, it's just kind of swimming in the pool. You know what I mean? Like it's just playing with its current momentum, and we didn't close above it, right? We didn't close above it, unfortunately. We did start to swim around, but we're not in any really real danger, or we wouldn't have been in any real danger unless we had lost 3607. We didn't lose 3607, so we survive another day. As for the 2 to 5 day projection, we totally missed that. So this does suggest a little bit of weakness compared, for the next week. It doesn't suggest anything bullish for the next week. If you wanted to be bullish, you really had to get above that 3805 level, and we just were not able to do it. Sorry, this box was meant to be red. There we go. Support resistance, right? And I had projected this a week before this happened. So, boom, guys, like this thing has just been working out. Boom, like totally boom. Nailed it. Nailed it. I love bragging on those little things because, of course, I make mistakes all of the time, and so it's just nice to have a win. Like boom, like we got it, guys. This momentum zone, this is just a projection, the 2 to 5 day, just a suggestion, right? And we weren't able to capture it, so I'm just going to delete that. How about our new zone? What's valid for the next 24 hours? Well, guys, if we can close tomorrow afternoon, that's Friday afternoon, above this momentum zone, and let me color this. Baby blue there, just to show that it's our new pool. And we are kind of hanging on to the top of it, but if you want to continue rising, we really need to get a bounce off the top. We need to close a daily candle on top of it. If we're just swimming around, well, we just swim around for another day. The level that we don't want to lose is 3670. You don't want to lose 3670. And if we modify that with our MACD, you can see that it's actually closer to 3690. Okay, guys? So your key level that you don't want to lose on the S&P 500, the ES1 mini futures, right, version is 3690. Let's stay above 3690, guys. And of course, if you get above, 37, let's just call it 60 because we got the weekly 4 in that area. If you get above 3760, that's going to look quite bullish. And then we do have this area all the way down here at 3584, kind of a double bottom off of this thing. I guess that could hold, but I don't think the market would like that. So I'm just not really going to suggest that. The areas that we're looking for the S&P 500, nice and bullish over 3760. But if you want the 2 to 5 day projection, where I think we have to be in order to capture a longer term momentum, then we're really going to want to be above 38.0. Let's just call it 38.02. Yeah. What is this? What do I have it marked out? 3803 is what I calculated. 3803. We want to close above 3803. Then that's going to be very bullish. So here are your key levels for the S&P 500. 3803 closing tomorrow. Nice and bullish. Probably Monday and Tuesday are going to be great trading days. If we just get here, we're getting at the we're going to hold the bottom of the 2 to 5 day projection and the top of the daily, so it's still bullish, and it's 37.60. And then if we're just swimming down in these waters, getting a little bit worried if we pass below 36.90. And if, of course, if we break below 36.72, I think it's kind of game over. We're going to check the bottom of this, check the bottom of our range. So there you go, guys. There's your updated momentum zones for the S&P 500. For the NASDAQ, right? NASDAQ mini futures, the NQ1 is the one that I use, the NAS 100, but you can find basically the equivalent on your own version of the NASDAQ. Maybe you use the QQQ, whatever you use, doesn't matter to me. Guys, for the NASDAQ, similar to the S&P 500, not holding on top of the zone yesterday that we needed to hold for uber bullishness, and so we did. Gotta move this gray one back. For some reason, TradingView always sends it forward. We didn't get the uber bullishness above 11,650. But we're still in our momentum zone, so we're still pretty chill, just not not great. And we didn't lose our MACD, so we're pretty good. So everything's fine as we closed this afternoon on the Nasdaq, but this is pretty much useless right now. Also, we're well below our projection for the 2 to 5 day, so that one's useless. Let's get our new projection in place. And for the calculated area, just going to change this to our new swimming pool color. There we go. Fresh water here for us to swim around in. And right now we are on top of it, which is a good sign. If we hold this level of 11,500 and let's just call it 40, what did I actually calculate it as? 11,000, well, 275, okay? 11,000, what the heck? That's not right. There we go. 11,540. Pardon me, I misread that. 11,540. Then, we should be pretty chill. If we close the day on Friday afternoon above 11,540, like we're pretty good to go. If you want to be uber bullish, right? You want to be super bullish about this market, then if we close tomorrow above the white box, this is a hypothetical 2 to 5 day projection, 11,640, so just $100 higher, then we are going to look really bullish, guys. Like this thing is just going to be like boom, all right? Like it's going to be boom, right? But if we don't get that level, then I don't know. Like we're cool. Like we're cool. And as of right now, it looks like we might be taking a dip into the momentum zone, which, it can be hit or miss in this area, but as long as we don't breach the bottom, and I like to actually go with the MACD if the MACD is above the bottom, then 11,290, let's say, that's going to be the bottom. So there you go, guys. For the NASDAQ NQ1 mini futures above 11,640, looking great. Above 11,540, then looking pretty good. And then, of course, below 11,000, 290, looking kind of bad, looking not good at all, right? And then, of course, if we do lose that level, probably we're going to retest the bottom of our range here around, 10,940-ish, right? So, guys, there you go. That's NASDAQ. Let's go ahead and take a look at some of our risk factors. Of course, the big deal today was that the dollar made a rebound, right? And so we just got a massive rebound on the dollar. You can see what this bullish look looks like over here. Boom, this thing just like went off, like just just vitalicked it, just went the full vitalic and just broke its downtrend. And so the squeeze was over. It thought that just checking back to the daily, 35 or whatever this is, what do I have that as actually? The daily 34. There we go. The daily 34. Checking back to the daily 34 was good enough, and boom, it just went and continued on its way. Now we can see that the dollar actually has a history of these type of things, and so there is the possibility for it to continue downward. Let's say it does something like this, right? Let's see, what did it do before? It went to the 50, and then it came back up to the 21, and then it went back down to the 89, basically, kind of front running it. And so, and then it went. So if the dollar has this type of a pullback, then probably we're gravy, guys. Like the dead cat bounce, the relief rally, the whatever you want to call it, the fool's rally, like it's probably back on, and like so we're gonna just chill in our positions. But if this thing breaks this neckline that I'm showing you here, where I'm making a projection. Let me turn off these EMAs just to have less distraction. If I made this projection to suggest that a possible fractal is being put in with this previous area, and if we get a bounce off of 111 and a half approximately, and then break above that 112 again, we will have formed. Let me go to the 4 hours. We will have formed a inverted head and shoulders with a potential measured move back up to 114. And if we do that, then we're probably going to retest the neckline on this one, and get a small rejection back to like 113-ish, something like that. And then if we do that, we'll actually have created another inverted head and shoulders, right? Which is going to have a measured move up to 118 or even 120. Okay, so I would just be very skeptical about the market right now. There's a high likelihood this fractal could be playing out again if the Fed is true to its word and it does continue to increase rates with perhaps another oversized 75 basis points increase. Then this is likely to come to fruition, guys. Let's see. But then again, I did tell you the case for continued bullishness in the markets. If the dollar continues to break down, that would be good for markets. And so I showed you how that's possible. Just be on the lookout for this also, okay? Um, and let's see here on the VIX. The volatility for the S&P 500 is just spiking back up. So I don't know what the VIX is doing, to be honest. It's behaving quite weird for the VIX. And but over time, I do expect us to put in one of these capitulations eventually, where we just launch into hell. I don't know if it's going to be now or it's going to be later or whatever, but at some point, I expect us to launch to hell, and that's when the market will really capitulate. Okay, so until then, we're just middling around in this wedge that I have marked out here, and until we very clearly get out of this wedge, then I'm just not going to really understand what the VIX is doing. And maybe that's kind of the market makers' like intention. They don't really want us to 100% know, or maybe they just don't know themselves, what to make of this market. And so we've got this huge indecision triangle on the VIX, which is weird. So I mean, we've done that before. Like we make these type of wedges, periodically from time to time. It's just they bust out in one direction, either up or down, and it's quite dramatic. It's not like a small thing. And so just continuing to chop it out, and we are getting closer and closer to the edge of this wick. And I don't know, guys. Like I may actually end up having to stretch this thing out, and this market may just decide to be indecisive for much longer than we think. So, maybe those weren't fake outs to the downside. Maybe that was the real support. Maybe that was the real support. Maybe we're looking at something like this, you know what I mean? And since we did reject off of that level, I shouldn't ignore it, to be honest. So, I don't know. Let's find out. Let's find out. It's starting to look ugly. I don't like this formation. Let me make that one purple. But, yeah, VIX shooting up right now. I can't even say. Is this thing going to get rejected or what? I just can't say. So, but this volatility is bad for the markets whenever it's rising. So if it's rising, it's just bad. It's rising today, so it's bad for the market. USDT dominance still chopping around in that broadening kind of ascending wedge. It's more of a flat wedge, to be honest. But yeah, I mean, if this market gets skittish, we could easily pump up to 8%. And that would be really bad for trading because it would represent people getting out of crypto. We're getting kind of a little W formation here. So let's be on the lookout for that. Guys, I'm getting a little bit tired, getting a little bit exhausted. Thinking about all this stuff wears you out. So I'm going to end it there. Just to maybe just really flip through our altcoins really quickly. And you can see Zilliqa just continuing to hold support, making a little bit of a W, but popping up a bit. So I don't know. You know, again, like if Bitcoin pops up, if the dollar drops down, then probably Zilliqa is going to follow Bitcoin. ADA, same story, almost the exact same thing, guys. In fact, why don't I have a line here? Why don't I have a line right here? Let's make that a nice dark, a nice bright white line like what I put on KDA. And we're just using that as support, just holding it as support. And you know, if we pump off of this, well, good. If we break down from that, well, bad. Okay. So 43 cents. Just want to hang on to that. Not doing anything interesting. Not doing anything bad. Just chilling out. KDA, similar story. Bumped our heads on that white line that I did suggest. You know, was a possible flip from support to resistance. I didn't really remember why I made that line. Actually, now that I recall, in the last video, I didn't remember why I had made that line because I had made it before we even did this move, let alone this move. And so, but I did make that line on purpose because just like ADA, just like I made this line right now, it's just my instinct to do that because I want to see where, if we break down, where we could bump our head on if we end up breaking down and then retesting. And so for KDA, we did something very similar to what ADA did. ADA is doing like basically this right here. This is where KDA is, like compared to. I mean, this is where ADA is compared to like KDA. But KDA lost that support. Check the bottom over here, and then it's like bumped its head up here. And so yeah, there was a nice, you know, like 8 to 10% move on the breakout of this wedge, but it just needs more time. It needs more energy to get through there. Bitcoin's not providing that energy. The dollar is suppressing the market. And so we're back at this support level. And it's no big deal. Like this is still a good price. You know, $1.39, $1.40. Still a good price if we are going to have energy in this market. It's kind of relief rally, kind of a fool's rally, if we do get a pop up. But yeah, I mean, just if the markets continue to be bad, I could definitely see KDA coming as low as 50 cents, guys, like 75 cents, 80 cents. 80 cents would be a really good deal for KDA, okay? And look, like we've basically lost our support and we're flipping that previous support into resistance. I don't like that, but we do have a secondary layer, right? You can see all these wicks. Like we do have a secondary layer, so I want to see us flip 148. Like please KDA just flip 148. Like, don't chill down here. Just flip 148 again, and then you see these nice big bounces off of 148. Okay, like boom, boom, and yeah, they get it down here too. It's just a little bit more hit or miss, and this is kind of weak. Like it just, I don't want more pressure to the downside. So KDA, please hold this level of 140, and then quickly break through 149, I guess you'd call it, and then let's see if it can go like it's gone before. Okay. Guys, CRV. CRV again, just grinding its way down. I mean, I don't know what to make of this. This could be a bear flag, right? And so the measured move would be down to here. Boink. Look at my line. Look at my line right there. Like if this is a bear flag, then boink, like right to it, right to it. If it's not a bear flag and it's just grinding up, then it's probably coming back here until it comes back down. You know what I mean? Like, and then it could do something like this. Like if it uses this area as support and then breaks out, then we might expect it to come back up to this area. Okay, so look for that. Like potentially a pump to 98 cents, right? Something like that, and then potentially a dump to 85 again. You lose that 85 area, then you're probably going to like 69 area. You hold on to 86, then you're probably gonna get a breakout, which could lead you to $1.28. So just got to keep open-minded to this stuff, but you do see the formation that's playing out. Not gonna make too much commentary on this one, just because it's not fully baked yet. Don't know what it's gonna do. Don't know which direction the market's gonna go. So for me, this is the range that it's playing in, right? You see this red line, you see this teal line, and then everything in between, that's its range. And so for me, it's just in the middle of the range. I'd rather buy it here, you know, if to buy anywhere. But on the breakout of this downtrend, that could also be a nice play as well. So let's just look forward to this. Flux. Oh dear, Flux is kind of losing this support area over here. It's retesting it, and just hopefully it doesn't make that into resistance. Otherwise, probably down another level, probably down to 61. If, however, we can hold on to this, get some bullishness, get to like 86, then probably we can get up to this a dollar again. But yeah, I mean, we're gonna have to see. You can see the majority of the price action was here and here, you know. So, could we expect this area? Probably, probably. But don't want to speculate. As long as it's at support right now, just can't really knock it. So Flux just trying to hang on there, but you guys can see if I zoom in, like Flux just lost it. You see this wick here, just kind of got pushed down underneath support. See this wick here, popped it up above support, and then we went all the way to the top here, right? We want to see that happen again, right? We want to see us go pop, and then boom, right, like that. But we need to be above this level. As long as we're under this level of 81.5 or whatever, then it's just too dangerous that we could drop down, to like 75 cents or 70 cents, something like that. Guys, XRP. Uh, I don't know. This kind of looks like a Head and Shoulders to me, right? Doesn't it kind of look like a Head and Shoulders to you? Kind of a sloppy one. Could be a broadening flat wedge. Also could be something, like this area, not necessarily this area. So it's just we're losing this. But then again, this could be a diagonal. So you could just be retesting like that. Yeah, so watch this space for XRP. Maybe it could pop back up to 52 cents if we don't lose, 47. If we don't lose 47 cents, maybe it can pop back up to like a 52, 53, maybe 54. It's getting some type of interesting structure here. My guess is this thing's getting pretty hot. We do have those bearish divergences. This thing has performed pretty hot. MACD is looking not great here on the 4-hour. On the daily, it's also pretty red. Yeah, this thing's what a weird formation. This thing's looking like it wants to kind of fall over, but it also has that look where it could continue as well. So hard to say on the daily. How about the weekly? I mean, weekly's bullish, so I don't know. Yeah, basically what I said earlier. All right, guys, gonna end it there. I believe that we basically touched on everything. Um, let's check out just briefly. Let's see what Qredo's doing. And Qredo did top out. That was to be expected. We did have this resistance area up here, right? And so we did get that top out. That's why I suggest do not FOMO into pumps, guys. Like if you're gonna buy, like buy on a retest or something like that. And so maybe it's gonna come back into this area down here where perhaps it catches support, and that would be like 24 cents-ish area, right? Somewhere in that area. Let's look at Cpool, since I did mention that one. Cpool. And same deal, right? We have this resistance area up here. We just had like a massive pump on a Cpool, so that was a perfect spot to take profit. What did I say? Don't FOMO in on pumps. Wait for a pullback. What percentage is this pullback? Ooh, 32% pullback. Ouch. Sorry, Cpool holders. We are actually sitting at this support line right here, or resistance line, which is now, well, it was never resistance. It was always only support, so it's a support. And there's a good chance that it can hold on to that. And maybe this was the accumulation. Maybe this was the accumulation zone of Clearpool. And that's maybe the best deal you're ever going to have had on Clearpool. I don't know about that. Clearpool tends to have these big pop-ups and then like a chop back down. So I'm skeptical. I think we could make our way back down. But if this market stays bullish, then this is a support level where we've had a nice pop before. So we hold on to this level. We could have another pop again, guys. And that one could also be a disgusting rally of, 100%, 140%. So, yeah, interesting times in the Cpool world. Okay, Clearpool. Let me just get rid of some of these scrappy drawings here. Well, whatever. I'll just leave that. Of course, if we do break down from this zone, then probably we're heading to 76 cents next, something like that. 76 cents. Not going to be too precise, just kind of eyeballing these ones. Okay, guys, that was your alpha for the day. Stay safe and happy trading.